Let's bring in Evercore analyst Mark Mahaney for a look at what's been generated here, Mark, in terms of potential opportunity, maybe some hazards out there in your universe. What has the market delivered to you in terms of an ability to either reload or back away?
Well, I think you still have for almost certainly for the advertising names, you're going to like Meta and Google, Alphabet, you're going to have accelerating revenue growth and margin expansion in the back half of the year. So this recent pullback, Mike, I think sets up good long opportunities for those stocks, particularly Meta. That's one of our top three stocks. There's a lot of debate about Amazon that has to do with the direction of AWS growth, and there's market skepticism that they're really going to be able to generate acceleration in the back half of the year. If they do, that stock has got a lot of torque to the upside, and we continue to like Uber, which is sort of held in here along with some parts of the market.
You make the case that sort of the Meta earnings leverage story, top-line growth story, maybe is somehow still underappreciated, even though the stock has done so well. How are you also thinking about this idea that perhaps charging for subscriptions in Europe, how does that blend into their profitability per user?
I'm not sure that blends in well at all. So I don't know whether that's a negotiating tactic with Europe. It'd be, I think, unfortunate if Meta has to do that. There's this debate about whether Meta should be allowed to do personalized, targeted advertising in Europe. It seems odd to me. You've got a choice. You want personalized advertising or you want junk mail. I would think the user experience would be much better with the first, but I'm not sure that that's what's going to happen in Europe. So I'm not sure that blends well. But I think the rest of the business, and I know that's a sizable part, but I think the rest of the business, you've got these three product cycles: the rebuilding of the ad tech stack, the increasing monetization of the Reels part, the short form videos on Meta, and then you also have the rollout of this click-to-messaging ad. These product cycles are really powerful, and you've got the easiest comps in the space. That's why you've got the most clear acceleration story out of Meta. Now it comes down to what the expense guidance is for next year. Keep it modest, Zuckerberg. If you keep it modest, I think you'll get rewarded by the stock. The stock will go higher.
And then while we have you, had a headline this morning out of the Wall Street Journal that Netflix may be considering some price increases out there, too. The stock has been green on a down day. Is that a key part of the story? It has been a theme for a while now.
I think it is, Mike. I think it's a key part of the story. I love the way the management team has phrased this. They talked about widening their price points. It's just a wonderful way to describe what really is a price increase. They talked about this publicly, so I don't find that terribly surprising. The question is when. The Hollywood strike did push that timing out. They're not going to put a price increase during a strike, and they're not going to put a price increase until the content slate gets more robust. And there may be some holes here, as the same for all streamers because of the strike. So my guess is that a price increase is coming on the high-end price points, but it's in the back half of next year.